Yo, what's good everyone? Hope you're all doing well. So welcome to my first video on YouTube. I hope you're all really doing well and having a good trading week. So I want to get into a video and pretty much a case study on Euro Canadian, so EuroCAD, and we're on the 1 hour time frame. So I did post this on my Instagram, the video I done yesterday, and the post I done the day before. So I'm just going to go through and give you sort of an insight into how we trade, the power of it, and yeah, we'll go from there. So like I say, this is the hour time frame, and I'm using the bar replay tool, and I've brought price back to here. So as we can see, we've had, you know, price putting in these lower prices. We broke structure from here, and we actually wicked it with this candle. We pulled off, and then we actually saw some really nice momentum with this candle, and it's actually led to a new lower low. Okay, so we can see we have a lower low there, and we would have this as a lower high. Okay, so just basic trend, clear, you know, momentum's down, lower low, lower high, swing points. We have price that comes back into an area where we would be looking to get short from. So once price comes into this area, we're really looking to see how price is being delivered. Are we getting a clear reaction, and what is the lower time frames saying? Are we getting confluence? Is price still, you know, in lower time frame bullish order flow, or are we getting some sort of reaction, manipulation, clears of liquidity, you know, a mitigation, as we can see, and yeah, basically a reaction, so we can look for entries to take this short into lower prices to a new lower low. Okay, but once we get an impulsive move down, we obviously have a lot of imbalance in this candle and liquidity that was left behind, essentially. So price is coming back to regen into that area, but we're not always waiting for this. We aren't waiting. So once price comes down here, when we start to slow down, a little range, a pause in price, we're not waiting for price to return to here. We are, but that's not all we're waiting for. We're really looking to see what is happening in this return to our origin, or, you know, our area of interest, because there's a lot of percentage to be made in this area, just trading back into the higher time frames. And if you're wondering, for me, the higher time frame I always refer to as the 1 hour, because that is the highest I go. Now you might see other people use the 4 hour, daily, weekly, and you know, that's perfect, that's great for them. It's all about doing what fits you, fits your preference, your lifestyle, and taking it from there. For me, the hourly is so clear. I've been trading it for a good few years, and it's the time frame that I use to really base my trading around and refine on lower time frames with execution and price delivery, etc., order flow. And if you're looking to join our Discord community and you think you don't want to be trading just the hourly and lower, the concepts and the strategy applies to every single time frame. So you can apply the exact same concepts that we do, and your highest time frame could be the 4 hour or whatever you want it to be. It really comes down to the individual and your preference. Okay, and before people say that's discretion, it's not at all, because you simply do your testing, you get your data, collect your data, and then you find your time frames that fit you best. And then once you've got that, you know, forever. You can tweak it, but then, you know, there's no discretion in that whatsoever. Okay, so if we look at price, as I mentioned previously, we pushed down into a lower low. The overall bias is sells from here, but really digging into this sort of pullback and mitigation, okay? Because when we look at the low to here and back to even the base of this area, we've got 97 pips. And the way we trade, or the way I trade, like specifically, my max stop loss is 3 pips and my minimum is 1 pip. So if you're getting in trades down here, if price allows you to, with a 1 pip stop loss, 3 pips, you know, you can do the maths. There's a lot of percentage to make even back up to here. So now we've got our higher time frame area. Now this is clearly the highest point before price pulled back. Okay, so we pushed down, pulled back. That's the highest point. That's the lower high. That's the lower low. So I've marked on this candle for a good reason, which I won't get into. You probably understand why. Most of you will understand why. But 15-minute, we can get into a bit of refinement, which I would look at. So I would look to be refining that just to that last candle. So we have the last buy candle before the sell-off, a clear surge in momentum. You know, 1, 2, 3, 4, 5, 6, 7 bearish candles that led to the break in structure, as we can see. Just mark it on. Break of structure, and you can see that, which led to the lower low. And once price pulled off, we really come back down, and we had a range, then we pulled off, pulled back, and then broke substructure. So that shows to me a bit of bullish intent, but also liquidity left behind for a later date. So price pulled back, but it failed to go any lower. So this really indicates to me, you know, depending on what happens next, I really want to be looking to buy on lower time frame confirmation, and you know, buy up to here, and then identify how price is reacting up here. Now, with that being said, price does not need to just zoom back in. Price does not need to come all the way back up to here. We can still look for sells if price comes into a premium level. So if I just mark on this from the swing points, anything below, so anything below this halfway point, so the equilibrium, is considered, you know, a discounted price, a good area to buy, and anything above that is obviously getting into premium prices and is where we can be looking for sells. You know, ideally we get sells from our supply zone and our lower high, but price does not need to come in. So if this candle here, you can see we wicked up, if we got some lower time frame confirmation from here, then we can still take the trade, because what you'll find sometimes is, well, I can just mark it on, if we've got price coming down just like we have here, so we've got a low, lower high, lower low. Once price puts in this lower low, if we would have, like we have here, our supply zone and our lower high up here. But if price comes into, say, a premium price and then goes lower from there, we can still be looking for sells in that premium zone. So you'll see that a lot. Even you'll see price comes to respect the most recent sort of lower low, comes back to it, maybe just above it, and then it sells off from there. We can still take advantage of trades from that, okay? So getting back into this, you know, we're in discounted pricing from here, so we can look for lower time frame confluence and look to see what we get. So I want to go into a 1 minute time frame quickly, because I do like to just sort of really look at the area in which supply was created, and really look to see what price is showing, because sometimes there's unmitigated areas, and I think we can agree that the cause of this break really started from these 3 candles here. Okay, so you can see it's broke the low, and we pushed off a little range in price here. So I really want to be sort of marking that on, and you can see we also have a little bit of imbalance as well. Price pulled back, but it didn't actually come back into that area. Now I wouldn't be looking at that because it hasn't broken any structure, and it's not really any inefficiency, whereas opposed to this move here, we have a bit of, you know, a bit of imbalance, and it's actually caused a break of structure. So what you could do is take your zone and refine it as much as that, but that's not how I like to do things, because it's really, I think you can over refine, and once you do that you could miss out on trades. So what I would do instead is just mark it on and take that to current price, and you can see that is essentially what price comes into mitigate. We go just above it, and then this is actually when price does come down to sell off. But if we was to go to a 5-minute time frame, we can really see price comes in, we fail to go lower, and we push off into this area here, pull back, and then it's really this leg that comes into the, you know, to mitigate and into the supply zone. I'm not going to get into this leg here, but we can mark on some levels where price is reacting from. Okay, so there's always a reason why price is doing what it's doing. In this example, we can see, look, we're putting in high highs, high lows, little range or pulls in price, range here, and then we actually have a break of structure. Okay, a bit of momentum comes into the market, and we have the last sell before that momentum. Price comes in to mitigate, and the reason why this would also be an appealing trade for me is because it's swept liquidity. Okay, so we've swept liquidity from these lows here. Now I'm always looking for sweeps of liquidity when I'm looking for my, you know, my 1 minute confirmations, or sorry, 1 minute continuations, and yeah, because it just ups the probability, and the markets are always running to liquidity 24/7, so that's the reason for that. Okay, so we come in, sweep liquidity, mitigate, and we then get some nice momentum, and we push into the supply zone. So back to the hourly, you can see we tap in. Okay, so we know where we are on the higher time frames. We can delete that off. We know we've mitigated. Okay, and we come in, and what does price do straight away? We get a reaction, and we push off below this bit of liquidity here, and then we actually take out the high. So when that happens, that's, for me, that's definitely taking liquidity from the high, and we can see what happens next. I'm not going to get into it in extreme detail because, you know, that's out of respect for my Discord community and members, but if you do want to learn more on this, on exactly how we take trades, then definitely join. We have 980 plus members, active traders, and a few of the members have started doing videos, so we've got a dedicated channel. I could even show you quickly. Go into Discord. This is the server. Okay, so this is when you sign up and join, you'll be added into this area here. So you can see introduction, course content, which I won't go into because it's YouTube videos. This is my section. Okay, so this is my daily markups, weekly videos, case studies, backtesting, quick tips, and then we have premium members. So this is the case studies I was talking about. Members chat, group chats, off topic, winning, losing trades, traders that use Wyckoff, crypto, improvements. So if there's something I can improve on or something I'm doing well, you know, you can put it in here, and currency pairs. And so you can see how, you know, it's organized, there's no mess, it's all very clean, and it's just a really good place to be, to learn an incredible strategy. Okay, so if you want to join, the link to sign up is in this description from this video, so just look down below, and yeah, sign up if you want to. So yeah, getting back into this, I think I can, you know, we can go through this because I have already been through it on Instagram, but you can see we we come in, take the high, and we can see, look, we break structure, which is very clear to see. It's all about how price is delivered. Okay, price delivery is so important. Okay, so what's caused a break of structure? Clear range, push down, range, expansion out, break of structure, supply takes over, demand fails, we get a mitigation, okay, and then price is reacting to that, and we can see how it plays out. Just zoom out, and then you can see we get that reaction and continuation. So one thing I like to look at is range. So, you know, initiation, mitigation, continuation, and that's really how the markets are moving. Ranges, initiation out, mitigation, continuation, and then we can go to an hourly time frame, and you can really see, look, you're probably not holding it through all of this, but you know, the first target is going to be this liquidity, this low, and then you can see how price is reacting to that area and trending, and just the power of these sort of trades, really. And these are we get these trades every single week. You know, it could be 3 to 4 times, and like I say, we're not always looking for the sells. We're looking to buy into these levels, because these areas do not need to be respected. They will be respected more times than not, but they don't need to. So if we're trading into these areas, then if the lower time frames are still showing bullish order flow, then we can continue buying up into higher prices and, you know, bank more percentage. And if they are respected, then we make money going up, and then we make money going down. Simple as that. So that's going to do it for the video. Any questions on how we trade or our mentorship, let me know and I can get back to you. And also, if you want to see more videos on this channel, then leave it a like and a comment, and also subscribe to the channel, and that's going to let me know that you want to see more videos. I can do you know, cover smart money concepts, supply and demand, trade breakdowns, case studies, content requests. So yeah, let me know and I'll make it happen. Thanks for watching.